All right, good morning. Here we go. Start of a new month. Last month ended horribly for most stocks, but we are looking at the S&P futures right now. A little bit of a rally overnight, but definitely went right back and tested the low. Let's zoom in a little bit on here. So here we're looking at all of Sunday, starting at this dash line. So gapped up, went straight down to pretty much close to the lows of Friday. Bounced around, was pretty strong all through the middle of the night. And then once we got closer towards the East Coast waking up, you can see it sold off, tested the low again, bounced back up. So it's in the middle of its range kind of here. We do have the FOMC meeting this week where they're probably going to raise rates again. Last time that happened was a month ago, and it provided a rally. So I would imagine we're going to see something similar to that again. It just may not be today. Looking at the NASDAQ, pretty much same thing. We are bearish trend on both of those, the S&P and the NASDAQ. But I do expect we are going to get more of a longer term bounce here rather than just overnight. So I do think that we at least, with the S&P, I think there's a good chance that we can get back to this area, this 4350 area. But I don't think it's going to be today. But I think we start working our way there. Same thing, Russell. So looking at the dollar index. So this is the 5-minute chart, which isn't really too helpful. Actually, let us... No, I don't want to do that. There we go. All right, so looking at the dollar. So it is at the top of its range for sure, but the thing with currencies is like, what else do you want? I mean, there could be a short-term relief rally in Europe that coincides with the dollar selling off. Same thing with the S&P going up into this FOMC meeting. But this is by far the strongest currency and definitely the one that you want to be long against pretty much anything else. But I would wait for a pullback at least to this 101, this 100 to 101 area. Like I'm long half of my dollar position right now because it's gone up so much. Looking at the gold market, selling off. So interesting. And I wasn't watching this over the weekend very, very much, but selling off here into the Monday morning opening. So that's interesting. Ten-year yield still going up. This may be a case where you do want to go long the short end of the curve and short the long end. Even though that trade has been working, it still may keep working. Crude still bouncing around in its range. Definitely loading the boat on crude future or on the commodity here around 95. There was some sort of attack in Iraq, allegedly from Iran. Not quite sure who benefits from that between the two of them, but you may want to think about adding a long energy play with short something else. You just don't want to be naked in this market. Natural gas, again, continuing that uptrend. I would want to wait for a pullback unless you're going to be long something with a short. VIX futures, I mean, the problem with the VIX is the higher it goes, the higher it goes, because it's a volatility index. So the higher the volatility, the more selling you're going to see, and so that doesn't bode well for stocks, especially since it went out. It went out at the high on Friday. I'm guessing it was right around there. Let's see. So that's today. Yeah. So it went out close to the highs on Friday. But still, more selling is going to beget more selling. So that's not going to be good. Then when it comes to the souffle, Tesla, the accounting fraud case that owns a bunch of Bitcoin. All right, market just opened. Tesla gap down, but it is got a green candle here, so it's rallying up. Bitcoin, same thing. Gap down, rally up. Wheat still continuing that pullback. This could be making a big bullish flag here. So corn. So it looks like some of the grains are rolling over. But again, with getting long this stuff, because it has now broken trend, I would definitely wait till it gets closer to this like daily Bollinger Band, the lower Bollinger Band. Soybeans doing the same, pulling back. Copper through the floor. Tips, which is kind of an inflation proxy, inflation hedge. Definitely not bullish at the moment, so that's it's all right. Not good for the rest of the world, but that's good for us. So here's that long the short end of the curve, short the long end. That trade still looks like it's got some strength to it. We got Chinese tech versus US tech. So I do like this trade for sure. And this one I'm going to wait until it gets down to about this minus 300 area before I put on small position. And then here we've got the short end minus the middle of the curve. Again, that's still bullish. So these yield curve trades you might just throw on immediately. And then we take a look at the dollar. I mean, it could be pulling back, right? And that'll be great for risk assets, at least in the meantime. Right here. So this yellow line is kind of where I think we start getting bullish, and then this would be kind of like a profit target area. But most important thing today is keeping an eye on the volatility, because nothing goes up when the volatility goes up. So gotta stay safe out there. Every tick it looks more dangerous, so